Hello friends, welcome to my channel Financial Fitness with CA Ashima Abel Yunus and to yet another video on understanding foreign remittances where I will cover the essential aspects for NRIs remitting funds abroad from their NRO account through $1 million scheme, under which NRIs can transfer their own funds from India to abroad. The points that I will cover in this video are: what are the prescribed limits for a financial year under $1 million scheme, applicability of the scheme, what is prohibited and what is permitted under the scheme, tax implications, and documentation required for transfer of funds by NRIs under $1 million scheme. But before we begin, I would request you all to subscribe to my YouTube channel. It's totally free. You can just log in on YouTube with your email ID and click on the subscribe icon, like icon, and share it with your family and friends. You can also share it in the WhatsApp groups in your phones. I will just take a quick pause for only 5 seconds so you can all take time to click on subscribe icon, like icon, and also click on the bell icon that you will find below this video. Please do that while I wait for just 5 seconds. Okay, so now I'll quickly introduce myself for the new viewers. I'm C.A. Ashima, a professionally qualified chartered accountant, a certified auditor, and a certified ERP implementation specialist, specializing in tax, finance, IT, and audits. I have worked as a partner and a director with one of the top 25 leading CA firms in India, which has also been a member firm of one of the big fours. After working in India for a period of 10 years, I moved to Sweden and have also worked as a senior financial consultant with a multinational and have catered to corporate clients in Sweden, Finland, Norway, Denmark, and the UK. I have also worked as a freelance financial consultant. Now let's understand what is $1 million scheme. To enable the NRIs to remit their money from their NRO account to their foreign account, the Reserve Bank of India introduced the $1 million scheme. NRIs can remit amount up to $1 million per financial year, which is from April to March, out of the balances held in NRO account subject to prescribed conditions. Remittances above this prescribed limit would require approval from RBI with emphasis on the reasons of hardship caused to such person if remittance is not made from India by him. One may note that if the limit is not fully utilized in a financial year, the balance limit cannot be carried forward to subsequent years. It expires at the end of the financial year. Now let's look into the applicability of $1 million scheme. This scheme can be used by an NRI, a non-resident Indian citizen, or a PIO, which is person of Indian origin, or an OCI, who is an overseas citizen of India, as well as a foreign national. This scheme is not applicable for resident citizen of India. For residents, only LRS is applicable, which is Liberalized Remittance Scheme. If you want to know more about LRS, then I have a separate video which is solely dedicated to the FAQs on LRS. You can watch that one. $1 million scheme applies to funds in NRO account and not to funds in NRE FCNR accounts. Funds in NRE FCNR accounts can be freely repatriated as these funds are usually accumulated from the sources outside India. Now let's understand what is prohibited. One cannot transfer borrowed funds. You can only transfer your own funds. One cannot even transfer funds to a third-party account. You can only transfer to your own account directly to your overseas account. Assets bought in violation of FEMA law cannot be repatriated. For example, winnings from lottery tickets, windfall gains from betting, etc. Agricultural land or a plantation property is owned, which is owned prior to becoming NRI or is inherited, then repatriation is permitted. But repatriation is not permitted if it is acquired by way of a gift or if it was owned against the FEMA laws, which does not allow an NRI to purchase an agricultural land or plantation property. In such cases, repatriation of sale proceeds of such agricultural property which was purchased or received as a gift as an NRI is not permitted. But if it is inherited from parents or if it was owned prior to becoming an NRI, only then the funds can be repatriated by the NRI. Now let's understand what is permitted. That is, what kind of income is repatriable under $1 million scheme. The list includes current income such as rent, dividend, pension, interest, etc., sale proceeds of properties or any other assets owned, proceeds from shares and securities, proceeds of insurance plans, superannuation benefits, bank balances, gifts from relatives, etc. Please be informed that this is not an exhaustive list, but it is an inclusive list. Now let's understand the tax implications in $1 million scheme. Under LRS scheme, 5% TCS is applicable on transfer of funds abroad by residents if the amount exceeds rupees 7 lakhs. But the good thing is that there is no applicability of TCS, which is tax collected at source in $1 million scheme. Only some bank charges might apply as per the policy of the bank. Now let's understand the documentation required. Form A2 and declaration under FEMA is the first one. It is a prescribed form to be obtained from your AD bank, where AD stands for authorized dealer, which are banks authorized by the Reserve Bank to deal in foreign exchange for specified purposes. An important aspect is the purpose code of remittance. Please make sure and consult your banker or consultant to ensure correct code is filled. The second one is application form for outward remittance. It is a bank specific form which is to be obtained from the bank. The third one is form 15CB, which is a certificate issued by a chartered accountant. Since remittance of funds could involve income that is chargeable to tax in India as per the Indian Income Tax Act 1961, the non-resident remitter is required to obtain a certificate from a chartered accountant certifying the income and tax thereon if the remittance amount exceeds rupees 5 lakhs. For example, if the remittance involves sale of shares or immovable property, applicable tax on computed gains is required to be paid. The form is required to be filed online on the income tax portal, and a copy of the filed form is required to be submitted to the bank. The fourth one is Form 15CA, which is a declaration by remitter. In addition to Form 15CB, the remitter is required to file a similar online Form 15CA under his name on the income tax portal, and a copy of the filed form is required to be submitted with other documents. The fifth is proof of source of funds, which are being remitted along with proof of tax. Banks are authorized to verify the source of funds being remitted and tax paid thereon. For example, in case of proceeds of sale of property, sale and purchase agreements might be called for. Another example is if the proceeds are from inheritance of immediate relative, a copy of will specifying the beneficiary's name can also be asked for. So friends, now it's time to wrap up this video. To know more about the schemes for making foreign remittances like LRS and FAQs on foreign remittances, you can watch my other videos. You can also watch my other videos where I have shared information about tax benefits for returning NRIs like RNOR tax status and other tax benefits for NRIs on sale of property in India, and many other videos related to financial planning and investments, which are not only relevant for NRIs but for all others as well. I hope you all will benefit with the information shared in this video, and if you find this information useful, then please make sure you click on the like icon, and please do subscribe right now if you haven't done that yet. You just need to log in with your email ID on YouTube to subscribe. That's it. It's totally free for all. So do it right now. Subscribe, like and share it with your family and friends, and do share it in the WhatsApp groups in your phones as well. Thank you and bye-bye.